All right, y'all, back to work we go. We got one more day left this week, and markets are rotating off that big range we talked about in last night's video. Now, very important clue. Anytime markets are rotating off the low of a range, it's always bear traps. Bear traps are almost always where the money is made the following day. And I have some very specific bear traps I'm going to show you tonight because I want to make sure that you have a roadmap to make some money tomorrow as well. So boy, it's been a fantastic week so far. We got one more day left. Charts look really great tonight. Let's wrap up the intro, roll those sleeves up, and go make some more money. It should be another fantastic day on Friday morning. S&P SPY ready to go tonight. NASDAQ triple Qs are always ready, aren't they? I have 4 clues on these charts telling me where I think the money is made tomorrow. The first clue is right here on the hourly chart. We like to use the hourly time frame, this 60-minute time frame, for the overall directional filter. It's very easy to see right now the buyers are in full control on the higher time frame. Clue number 1, our directional bias is the buy side for tomorrow. Clue number 2 is over on the calendar for tomorrow. Tomorrow's a pretty busy Friday. Now, there's 4 things on my mind for tomorrow. First things first, tomorrow is the 3rd Friday of the month. Kind of a weird way the month laid out this month. So tomorrow's OPEX. It's a summertime Friday. Options expire. I'm warning you right now, tomorrow may be a bit of a squirrely day. So consider yourself warned with OPEX tomorrow. News for tomorrow, retail sales, 8:30. Consumer sentiment at 10 o'clock Eastern time. A bunch of stuff in between, but I would imagine those 2 news events, 8:30 and 10 o'clock. Remember, 10 o'clock is always one of our favorite times to trade in our trade room. So keep an eye on that for tomorrow. That's our second thing for tomorrow. Third thing for tomorrow is, don't forget, 3:30 Eastern time, supposedly, well, not supposedly, it's confirmed now, we got the big Trump-Putin meeting at a military base in Alaska. Fingers crossed for some good news out of that, but you know, there'll be some cameras, there'll be a press conference, there'll be a bunch of hoopla around that. Trump will not let that go without doing that. So at some point tomorrow, my only concern on that is there might be a bit of distraction, right, for us tomorrow afternoon. So just be aware of that. We probably won't hear anything until maybe early evening tomorrow afternoon. So just be aware of that in the afternoon tomorrow. And the final thing too, I touched this last night. I'm going to be out of the office next week. There'll be no video newsletters posted next week. Next week, the 3rd week of August, we'll take a final short break, finish up the summertime season. I'll be back on the 25th. We'll wrap things up for August, hit the Labor Day weekend, and then kick off my favorite time of the year, of course, the fall season in September. So OPEX tomorrow, retail sales, watch that 10 o'clock shock around the consumer sentiment. And what will happen in Alaska? I think everyone is probably wondering that same question right now. But back to our charts though. I got 2 more clues here on some tick charts. Again, we like to use the hourly chart for direction, but we don't use that for timing entries. We use tick charts. By the way, if you're watching for the first time right now, that is a 7,000 tick chart. That is the 21 EMA, the little yellow line right there. Right? It's the only indicator that you need here. Remember, tick charts make pattern recognition easier. Tick charts make entry timing easier. Okay, there's 2 big clues on this tick chart. The first one's right here, this big range right now, right? That big range. Now remind me again, what do ranges do? They like to rotate. They go up, they go down, they go up, they go down, back and forth, usually with some symmetry. This one was dead on if you watched last night's video newsletter. Now, it's also a bullish range. And so in a bullish range, we know there's a lot more potential for a breakout, a big breakout going higher here. That's a big clue. One of my favorite clues, though, is that strong run down. Now, why is a strong move a big clue? Because I think of these as unfinished business. So anytime I see a strong move down like this, I know, do not be surprised if we see a strong shot lower at some point tomorrow just to take out that unfinished business. Anytime we see a strong move going lower in a bull market overall, odds are pretty good. At some point tomorrow, we'll find our way down around that 53 level. That's definitely one of the bear traps on my mind for tomorrow. In fact, I've got 3 entry tactics we'll talk about here in tonight's video. So it looks like right now we're trying to rotate going higher. I will talk about my favorite bear traps a bit later on in this video, but let's talk about a couple scenarios here as we go higher here. I mentioned earlier that with a range like this, a breakout and a breakout pullback will definitely be something that we want to keep on our radar for tomorrow. Our biggest challenge right now is how will that breakout go? So for example, let's say that we start kind of lazily running higher here, right? Lazily, right? Sleepy running higher, not a huge breakout, okay? Huge breakout, that gives us more flexibility. If all we see is this keep grinding higher here, what I'm gonna do is look for a breakout pullback actually off the actual range. And what almost always happens in these is there'll be a channel like this. You want to find some prior swings, and I want to get as close to the actual range as possible. Now, timing the entries. Entry timing, I don't have a crystal ball. It may seem like that sometimes, but I don't know how far that move will go. So I'm not going to pick a bottom on that. What I'll do is I'm going to look for a very simple bear trap pattern called a 2-try bear trap. It's very simple. As price pulls back, let those sellers try once, let them try twice, and then once I know where their stops are, once I know where their pain is, now I can buy into those stop losses. And remember, as we always say, these bear traps can really kick. They can give us some great momentum going higher. If we get a bear trap off that low and we see separation off of that moving average, if the pullback separates off that moving average, that allows us now to buy an add-on, to basically add to our winner. So one type of bear trap is a relatively small breakout going high, right? Not a big one. I'm going to cover that big one next, right? The big one's easier. Small one, get under prior swings. Get as close to that range as possible. Bear trap, add on, and let it run. Fridays love to run. Now, let's say we get a big breakout. Let's say retail sales comes out strong tomorrow, right? Consumer sentiment, right? I don't know. If it rips and runs higher, there's 2 things I'm looking for. One is the aggressive entry on the separation. In the free video course, this is a technical bear trap. Okay, so first scenario, something happens. News comes out, it blasts, it pulls back, and it separates off that moving average. Very important. Separation, higher high, getting right below that low. Now remember, whenever we see a range breakout, the size of the breakout leg, it's a measured leg, right? That creates our measured move. I don't know exactly where that measured move will be, but think about that as your target, okay? This is the first entry. By the way, I always go half size on those types of trades because, again, you're buying relatively aggressive into those highs up overhead. Okay, that's the first one. Now, on this one, with a much bigger breakout higher, now I don't need to go all the way back into that range because now the breakout's much higher here. Now I look at these prior highs over here. Those prior highs, those become areas of support now. See what I'm saying here? Okay, now with a big breakout, it's gonna be a 2-legged pullback, okay? 1 leg. 2-leg. Think about a measured move, A, B, C, D. It'll ideally be around some of these prior highs here. If we're lucky, there'll be a big channel, right, like that too, okay? Not required, but that's the goal, okay? So 2-legged pullback. Now, on this one, remember, anytime we see a strong move, that's unfinished business. So as we pull back, I'm not gonna pick a bottom on this. I'm gonna let those bears come in, try once, try twice, use that bear trap pattern, 2-try bear trap, like I teach in the free video classes. And then as we go higher here, remember, we know where the market wants to go now, wants to take out that high, right? So at this point, shallow pullback, higher high in price, and we add to that winner. If they have a breakout pullback in the dictionary, this is what it should look like. It's that initial aggressive entry. It's that 2-legged pullback. It's that bear trap off key areas of support, and it's the add-on back up to retest the high. Now, I do want to talk about, remember that strong run lower? I want to talk about if we go lower here, because in all reality, this could be one of our biggest winners of the week. I'll talk about that in 2 seconds. First things first though, if you're tuning in for the first time right now, I understand this might be a brand new language, a brand new strategy. I get it. I look at things a bit differently here on this YouTube video, but don't you worry. I teach all these entry patterns. I teach the entire strategy in my free video classes. Guys, the markets are way too good right now not to be making money right now. So I'll help you guys time winning entries and stuff. I'll put a link up top here for you, upper right hand corner. Hit that link that popped up there. Take that free trading course, because the strategy you'll learn in that video series will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are waiting for us each day. Most importantly though, let's face it, we make our money by timing good entries. So in that video class, I will teach you my 4 favorite entry setups so you can time better entries, get your confidence back in your trading again. Guys, if you're missing the best entries right now, if you've lost your confidence in your current strategy, what are you waiting for? Pause the video right now. Hit that link that popped up there. Watch that free video course. You're going to love all the trade examples I include. I have tons of trade examples of traps, add-ons, all the stuff I'm talking about tonight in a lot more detail, all in that free video class. Also too, guys, be aware too, I'm going to put all the important links below the video, the description. Start first with the free video class. That link is below. We trade together every morning in our trade room, 8 o'clock Eastern time. I'll put that link down below as well. And if you're on Twitter or X as the kids call it these days, follow me on X. I post a bunch of charts and videos and mindset stuff during the day. Again, all the links you'll need to learn more, hopefully earn a lot more, are below the video tonight, description of that video. Okay, so just in case you're watching for the first time right now, I know this is a bit more advanced for new people here, so make sure you learn with that free video class. You can thank me later. Everyone loves that free video course. Okay, so right now we're talking about range rotation, right? Range rotation. We're rotating up. Do we slowly grind and we use the actual range? Do we blast up, right? And then use the edges of the range? Okay. That's a few of them. Now, I got a few more things I want to talk about. For example, I want to talk about that strong move down, because nobody should be surprised tomorrow if we see something come out tomorrow, it slams lower. There are 3 ways in which I'm going to trade that tomorrow. We're going to cover that in a second. But here's a question for you too. One of the easiest ways in all reality for us to make money tomorrow is a range up here. Like I would love it if we kind of ground up here overnight into a nice juicy range right there. Now, if you know me, you know I love ranges, right? If there's a heaven for a day trader, it's just range day every day. It's sunny outside, range day, right? Every day. I'm kidding with you. Well, maybe not. Anyways, so if we go sub in a range here, right? Now remember, what do ranges do? Ranges love to rotate, right? They love to rotate. They go below the range, above the range. Bullish ranges, they love to rotate. So remember, we call these stacked ranges, okay? Remember this. If there's one takeaway from tonight's video, this is it. Stacked ranges. If we see a range develop and we got that range right there, remember, put these together, right? So we go lower. Now remember, again, I'm not going to pick a bottom on this, right? I'm not going to blindly buy this area like we saw today, right? Let them pull back, wait for the bears to commit a couple times, and squeeze those stops. Nobody has a crystal ball. It may seem like that sometimes in these videos, but we don't, right? So anyways, so we go up here higher now, or sideways right now. Range up here. Use the previous range, or if it's a really big break in a range, right? Same thing, right? Depending on how big that breakout is, use that breakout pullback strategy I just talked about. But if we have a trading range up here, this is the easiest one. We should all hope for this tomorrow, because now I can use that previous range as a key support level. I can wait for a breakdown going below, wait for the pullback to the moving average, use that same 2-try bear trap, always a higher high, by the way, always a higher high. 2-try bear trap, like I teach in the free video classes, And then remember, if there's one scenario where you need to add to your winner or at least let this thing run, it's always a range rotation, because now we know where the market wants to go. It wants to go below, it wants to rotate higher, and that is the money, right? That is, everyone gets a steak dinner. That's the target, right? On a Friday afternoon. It's the bear trap. It's the add-on. As you can see, the entry tactics are almost always the same. It's just different ways in which we use them based on the context we see, right? Is it a new range? Is it a big move, a shallow move? You'll learn those details more depth in the free video class. Okay, now remember this, right? Remember that ranges, that knife cuts both ways, right? So if it runs up first and then slams back down, remember, this always feels like a reversal. In fact, one thing we always say in our trade room is that right when that voice says, boy, this feels pretty bearish, that usually means it's time to be a buyer. And remember, the tick chart is for the entries. Do not let, like today, right? Do not let a strong run down on a tick chart. Do not let that fool you. The hourly time frame is for direction. We want to burn that into our memory. Do not let a situation like this, do not let a strong rotation, because I'm sure a lot of you noticed by now, right? Rotations are very fast. Okay, we'll oftentimes go above, and this thing just slams down, right? It just collapses down. It will make you second guess yourself. But again, once you know how this works, then you know it's not a reversal. It's not all it is it's a rotation, right? Bears once, bears twice, trap them in, and we go running right back up again. This is one of the easiest scenarios for tomorrow. We should all be hoping for a range up here, because then we can combine both of those ranges. One's for a breakout pullback, and the most recent one here is for a rotation. Okay, so that will be a great gift from the trading gods for us tomorrow. Now, let's cover my favorite scenario for tomorrow, which is that big run going lower. That strong move, remember, strong moves are unfinished business, okay? Now, you'll notice I have the shallow trap zone and the deep trap zone. This will tell us which entry tactic, which bear trap we're going to use. For example, I love the idea of running all the way down to that, again, taking out that strong move, finishing off that unfinished business. But we may not get that. We're bullish right now. A lot of positive vibes in the market right now, right? So, okay, we may only get a shallow pullback. Now, remind me again, what's the problem right here? The problem is we still have unfinished business. So on this one now, I got to be a little bit more careful. On this one, it needs to be a technical bear trap. What that means is bears once, higher high, below a low, right? Higher high, below a low. Now, these come in lots of shapes and sizes, right? Sometimes they bounce up pretty good and go higher like that. So remember, if all we get is below this shallow pullback and we don't punch our ticket at that 53, the key is under swings, right? The key is under swings. Remember that for tomorrow, right? And again, sometimes they bounce up really hard, and it takes discipline not to chase after them, all right? Get in under swings, and guys, if you miss it, it's okay, all right? If you miss it, it's okay. Trades are like buses, okay? Don't go chasing that bus. Wait for the next one. It'll be coming on the block 10, 15 minutes from now. So shallow pullback, technical trap, okay? Now deep pullback. Deep pullbacks, I can be a lot more aggressive on, because I've got all of that. Well, because now we're finishing off unfinished business, and I have ability now to risk small, make a big reward. Okay. On this one, it's a 2-try trap. Okay. Like over here today, right? We run lower. Okay. 2-try trap. Bears once, bears twice, 2-try trap, right? A technical trap, you're buying below that low, right? A technical trap, you're buying below low. Okay, now I would not mind that. I would love that for tomorrow. The technical trap is a much better entry. It is, because you're buying lower. But again, in this scenario, we don't need that technical trap. All we need is 2 tries so I can use their stops, right? If you're caught short and you get stopped out of your short trade, what happens, right? You buy your way out, okay? Now remember, once those bear traps start kicking for us and we start seeing that separation, off the moving average. We then begin to add to our winner. And where's the market want to go now? It wants to rotate the amount below, the amount above. Okay, makes sense? That's your steak dinner target, as I said before, right? All kidding aside though, let it run, right? Let it run. Bear trap, add on as we go. Now look over here. We never got separation today, right? Sometimes we don't get separation. If it doesn't separate, there's no add-on trade. Okay, simple as that. Don't force it. Don't let FOMO trade for you. Now, one thing you want to be aware of, okay? When we see a strong run, if this is a strong run down tomorrow, it's going to want to retest. Okay, it'll want to retest. So whenever I get that strong run down, when I get that 2-try bear trap, it's always a very quick first profit target, like I teach in the free video series. Get that stop up to point of entry. And again, usually it'll keep going. But sometimes though, it'll roll over and get another leg going lower. Okay, these are called retest trades. Okay, retest trades. Retest trades will soon become one of your favorite types of bear traps because it's going to feel like the world is coming to an end. Every rookie who hasn't learned this lesson yet, they're going to chase this thing lower. But remember, it's a tick chart. It's not the hourly time frame, right? This is a great place to trap in rookies. And again, it'll be somewhere below that low, right? As we always say, the money zone down there, right? The money zone. So we run low, we run lower. It's a bear trap down here. It pops up. It doesn't keep ripping, right? It pops up. It makes another leg lower here. It basically retests that low, right? Strong run down. It retests that low. On the retest, do it again. These are a gift, guys. These are a gift. They're very, very good trades. They're oftentimes our biggest winners in our trade room. We do not need a technical trap. It's a 2-try trap. It's a bear trap. It's an add-on, and same thing once again. So just be aware of that. If we do take out that unfinished business, it will probably be a very strong move down off some news event tomorrow morning, right? Bear trap, hopefully it runs up for us. If not, retest, do it again and let that sucker run because again, Fridays, they love to run. And one final thing here, then we'll cover the NASDAQ here. One final thing here, if we run lower and it bounces hard, right? Remember, if it bounces hard off of that low, I don't want to buy way up here. All right, that's not the goal. The goal is not buying right there, right? That's risk. Reward is garbage, right? I don't want that trade. If it bounces way up, what happens is we now start watching for entries under prior swings, right? A technical trap is now what we want, right? That is why today everybody wanted in below that low, right? As it popped up here, it comes back. Everyone wants in off of that low. It's the same idea. All right, if it pops up like this, think about risk reward. I don't want to buy up here. I want to get my risk reward ratio in line and buy below that low. It's a bit more advanced. I don't want to be too advanced these videos, but hopefully that makes sense on that. Let me know in the comments below if that is kind of a light bulb going off there for you. Okay, those are the scenarios for tomorrow on the S&P. And I apologize, I can't predict tomorrow. I don't know what tomorrow will bring. It's OPEX Friday, but now you know, no matter what happens, my game plan for tomorrow. And if you will put the effort in, right, there's money to make in that as well. How about some NASDAQ right now? NASDAQ is similar, but a little bit different here for tomorrow. Before I talk NASDAQ though, if you're enjoying tonight's video, please help me grow this channel, will you? By hitting that like button, make sure you subscribe, tell some friends about this channel, send a link out to trading buddies out there. Guys, I know we're all busy people these days right now. I appreciate you all tuning in, watching my videos. Thank you all for the likes, the subs. I appreciate every bit of love I get in the comment section below. Not the trolls out there, right? I hate that. I'm kidding with you guys. Anyways, as always, thank you guys for the support here on the YouTube channel. Let's now dive in and talk tick charts. So on the tick charts right now, and you'll notice right away here, right, 4,000 tick charts, slightly different time frame there on the NASDAQ here. What does that look like to you, right? What does it look like to you? That's a bull range. It's a bull range. Okay, so what do bull ranges do? They rotate, right? They break out, they pull back. Same idea we said earlier. What is that right there? A strong run down. What are strong runs? Against trend. They're unfinished business. Right? Unfinished business. So I would love to go in lower. I love this one, by the way. Look at that triangle. We'll talk about this in the free video classes, right? The triangle. Beautiful spot right there. Look at that pendulum swing. Pendulum right there. Beautiful spot right there. Now, if you take away that strong move down, if that strong move down isn't there, I can be pretty aggressive buying right there. But I can't be aggressive right now because that's unfinished business, right? That is the issue here. So in this area, it has to be a technical bear trap. Why? Because I need the safest entry here. I need the most protective entry right there in case it does go up and then finish off that retest, right? 1-to-1 target, stop moves up to point of entry like I teach in the free video classes. And again, think about that triangle. Use that triangle for target for your whatever steak dinner target, right? As mentioned earlier here in the video. We go lower. Yeah, this is the one we want, right? We want here now. Bear trap, a 2-try bear trap off of that low. It pops up. It separates off of that moving average, right? Pullback separates. Again, sometimes we don't get separation, right? Sometimes there is no separation. If there is, we add to our winner. A lot of examples of that in the free video class, right? There's that bear trap and that add-on. Very similar that we saw on the S&P. If it really rips running lower, bear trap back up, retest trade, right? Retest trades. Again, you will love retest trades once you learn them. Retest trade, bear trap, back up again. Same thing as before. If it bounces hard up off that low, we don't buy high, we buy low underneath prior swings. It's the exact same game plan we saw earlier on the S&P. And then remember, as we go higher here, it's all about how big that breakout is. We have a good idea of where the breakout will go, right? That pendulum swing up there puts us right around that all-time high. So now imagine now, right? Imagine now we have a really big breakout, right? It really crushes, really big breakout. News comes out, something happens, right? Trump and Putin they hug, right? At the meeting on Friday, I don't know, right? Something happens here. They're besties now, and it blasts, right? That's the add-on there, or the entry there. And again, the breakout leg is the measuring move leg. And again, this one's a big breakout, right? Big breakout. Now we use all the highs, right? Now the highs are in play now. 2-legged pullback, bear trap off it, and back up where? Back to retest that high, right? Big breakout. We now use the edges of that trading range, right? Very important clue there. Or maybe it's a lazy breakout. It pops up, kind of grind, you know what I mean? It's a lazy breakout. It's OPEX Friday, for crying out loud. Late August Friday, right? It's a lazy breakout. Now that range is the magnet, right? Now I can't buy low by using those highs right there. So now the range is the key, right? Makes sense, right? The bigger the breakout, the higher the levels I can use. The smaller the breakout, the more important it is to use the actual range right there. Makes sense? I think it does, right? It's all about risk reward. It's all about buying low compared to where that high is. I mark off that high. I mark off that low. We look left. We find prior swings. Ideally, it's off that trading range. It's below a prior swing. Get underneath that moving average. And remember, would anyone be surprised if it just crushes back down again, right? Pendulum swing, bear trap, and whoop, right back up again. Do not be surprised at that at all at some point tomorrow. Do not get fooled by a big move down on a tick chart. But in most cases, though, it'll pop up, bear trap once, twice, trap those bears in. Don't pick those tops and bottoms, squeeze stops, back up, and we're off the races going higher here, right? The last one, of course, was pop up into a range, stacked ranges, right? You know this one now, right? Stacked ranges, running lower, bear trap, swinging back up, the pendulum swing. Again, we love stacked ranges in our trade room. All right, guys? I didn't mean to go too fast here on the NASDAQ, but you can see it's the same basic stuff we mentioned earlier on the S&P. That is the game plan for OPEX Summer Friday. What do you think? Let me know in the comment section below, but that's my game plan for tomorrow. Now, speaking of tomorrow, the place to be in our trade room every morning, 8 o'clock Eastern time. Guys, the easiest way, start making money in these markets. Come out and learn and trade along with us every morning at the opening bell. As always, I'm going to put all the important links below the video tonight. Start first on that free video class. You're going to love all the trade examples I include in that short video series. then come join me, the trade room, and we'll do it together. You'll love every minute of it. Guys, in the meantime, have a great, great week next week. I'll miss you guys next week. Back on the 25th. Be well. Be nice to each other out there, and you better be here next time. Adios, amigos. Bye for now.